Well, morning everyone. It's me again. So, as you know, Zebra spends a lot of time, effort, money researching the retail sector, in fact, all sectors, to make sure we understand as much as we can about the markets that we operate in. You've already heard about some of the in-house developments that we've made, and you've already heard and seen some people from businesses that we've acquired over the years, in particular last year. But one area you may not know about is that Zebra has a venture capital business, and we spend a lot of time and effort researching to try and understand where the market is going, which businesses are complementary and interesting, and then some of those we invest some money into. But no good for me to talk about that. Why don't we hand it over to Tony Palcheck? Tony is the managing director of Zebra Ventures and can tell us a lot more about how Zebra looks at the venture market, what companies we're invested in, and how we see retail going forward. So, Tony, over to you.
All right, thanks a lot, Mark, and good morning, everybody. Thanks for having me participate in the event today. I'm going to talk about Zebra Ventures a little bit, but I'm going to talk more about the market and some of the things we're seeing. And I'm hoping that it will stimulate your interest enough that we'll have more dialogues about some of the topics that I plan to cover. So, first of all, we're going to talk about the 4 years and what a difference 4 years makes. I'm going to talk about 5 companies in the space and their keys to success. And I'm going to talk about what I call are the 3 themes that Zebra's been looking to invest in, and that's automation, analytics, and artificial intelligence. And then I'm going to talk a little bit more about retail trends and some specific subsets of categories that we're looking at. So first of all, I talk about what a difference 4 years makes. And you'll understand why I included this slide in the next few slides. It's been an incredible, phenomenal 4 years in the space. So I say, what a difference 4 years makes. And what I've listed here is 5 of the top companies in the Standard & Poor's 500 or the S&P 500. And what I want you to focus on is where they were in 2017 from a market valuation perspective, and this is in dollars billion, and then where they were 4 years later. And if you just look at Amazon and the incredible rise in their share price that they achieved, but even Apple, Google, Microsoft, and Facebook all grew substantially. And collectively, their market valuations went up almost 300%. So what do they have in common? Well, I'm a venture capitalist, and all of these companies were venture-backed startups at their beginning. They're all heavy on innovation, both internal and external, and I'm going to focus a little bit more on external innovation because that's what I do for Zebra. They're all tech stocks. Something that I'll show you some data on is that they're all serial acquirers and investors, and they're huge investors in artificial intelligence, automation, and analytics. And most of all, or last but not least, they're all impacting retail. So I talk about the link between valuation and innovation. So on the left, you'll see that the companies that were rated most innovative in 2020 by Boston Consulting Group. And you'll see the 5 companies that I just mentioned are all on there in the top 10, and they occupy the first 4 slots. Okay, I would argue that it's no coincidence that companies that rank highest in terms of innovation also rank highest in terms of valuation. So there's a link. And I'm going to talk a little bit about how they get their innovation. So where does their innovation come from? Obviously, a lot of internal R&D. But I think what people don't know is that there's a lot of external innovation done by these leaders. So if you look at the chart on the left, you'll see the number of acquisitions they've made over the last 4 years. And pretty much they've averaged almost one acquisition per month. So they're bringing innovation into their company through acquisitions. And if you look on the right side of the chart, you'll see that those same companies bring in a lot of information, a lot of innovation through investments. So some of them have venture capital groups like Google Ventures or the Alexa Fund for Amazon, or M12 is Microsoft's venture group, like Zebra has Zebra Ventures. But if you look at the quantity of deals that they're doing, it's incredible. And this is how they keep their fingers on the pulse of the market. So they're constantly sensing the market through their investments, and sometimes those investments inform them enough that they want to make an acquisition. So I think one thing leads to another. The reason, by the way, that you see Apple only having one investment is they don't have a venture capital group. They don't really do direct investing. But what they do is they invest in funds, in venture capital funds, that do investing somewhat on their behalf. So trust me, Apple has their fingers on the pulse of the market too. But a lot of external innovation, and I think innovation leads to market growth and valuation growth. Here's an example of market growth, and you look at Amazon and a bunch of other retailers that I have listed on here, including some of you that are participating in the event today. But you can see that Amazon has 1.63, ended the year, ended 2020 with 1.63 trillion in market value. They were almost triple what Walmart, CVS, Target, Walgreens, Best Buy, and the others were combined. And I look at that and I realize that Amazon has other businesses, and their most profitable business is Amazon Web Services. But it goes to show you what innovation looks like and the impact of innovation. This was a company that was a venture-backed startup, or around 25 years ago or so. And I look at how they've grown, and a lot of their growth and a lot of their investments are in automation, analytics, and artificial intelligence. So I talk about where they fit into retail, because this is a retail presentation. And I would say they impact retail greatly. So Amazon, I would say, is a pioneer in some versions of store technology. They recently introduced the Dash Card, or a smart card, at one of their fresh stores in California. They introduced basically a palm reader for secure payment at one of their stores. They introduced their frictionless checkout solution and their just walk out technology that allows people to buy stuff without having to go through a formal checkout line. And they've done obviously other things. Facebook's impacting retail. It's one of the places that people go and they get their opinions, or they learn other people's opinions on different items. They have great personalization engines. They have on-platform shopping. And so some people's first view at a product starts on Facebook. Google, a very similar thing. They've added visual search and augmented reality search for cars. They have a nearby tab for Google Shopping. And I could go on. I don't want to spend too much time on these big players, but just rest assured they're investing in automation, artificial intelligence, and analytics, and it's part of the transformation that we're seeing in retail. So when I talk about money and following the money and looking at these valuations, as a venture capitalist, what I try to do is see where the money's going. And what you can see on the top half of this chart is investments and then acquisitions and IPOs associated with artificial intelligence. And you could see, it doesn't take much to see that everything is up and to the right. And 2020 is a little bit low because of COVID and because the year hadn't ended when I got this data. But you can see it's generally up and to the right. The bottom half of the slide is investments in automation. And you could see it's grown almost exponentially over the last 5 years. And I highlighted patents because that's related to the innovation that we're seeing in automation. Overall, there's been $108 billion invested in over 3,000 AI and automation startups. And it continues to grow. So when I talk about artificial intelligence, what do I mean and why is it relevant? Well, there's a few different facets of artificial intelligence. One is natural language processing and speech recognition. And quite frankly, we do some work there, but not a lot. I would say the more impactful things to our business have been in machine learning and image processing or computer vision. And that's the kind of stuff that Amazon uses in their Go stores, is computer vision. But if you look furthest to the right here, you could see the compounded annual growth rates of these technologies. And you can also see it in the various segments. And if you just look at it, glance at it, you'll see that it's around a 50% CAGR. So once again, I try to follow where the money's going and make sure that Zebra understands where it's going and what the impact is on our business and the business of our customers. So the summary here is we're looking at the 3 A's, and we are investing in those spaces. So companies must innovate to remain successful. Innovation comes not only from the inside, but from outside. And Zebra is leveraging external innovation to augment our internal innovation efforts. So I'm going to talk a little bit about retail trends and where the 3 A's fit into basically the supply chain. So as you know, Zebra is involved in manufacturing, warehousing, transportation and logistics, and retail. And the 3 A's impact all those segments of our business. If I just focus on the retail segment, and this is just a subset of the things that we look at, but those 3 A's impact automated inventory monitoring, automated checkout, micro-fulfillment centers or general fulfillment centers, and price optimization analytics. What we've seen over the last 4 years, but especially over the last year, is the impact that COVID has had on our customers and their businesses. And so some things that COVID really brought to the forefront, one would be e-commerce enablement. So people ordering online, of course, and then making it more frictionless if they do go to a store, and the requirement for omni-channel order management software and better payment solutions. We've also seen a greater degree of personalization of online discovery and buying. And so there's customer journey map technology, there's demand sensing, there's cognitive search solutions. We've seen, and we've spent a lot of time on, the digitization and automation of the supply chain. And that includes supply chain software for supply chain management, robotic fulfillment and micro-fulfillment centers, inventory and demand sensing, autonomous delivery, and on-demand warehousing. And last but not least, we've seen a shift in-store automation related to frictionless checkout, better inventory visibility, greater merchandising and compliance solutions, and contactless checkout. So all those trends, those technology trends, are marrying up with industry trends, and it was accelerated by COVID. So this is a chart from CB Insights, one of the tools that we use to evaluate spaces. And what you see here is retail technologies, retail tech companies by category. And it's all the startups. But I wanted to highlight a few things and share what they're looking at. So where the money's going in retail: cashierless checkout, on-demand warehousing and delivery, store ops and analytics, robotic fulfillment, and merchandising and inventory management. So we look at what's going on in the industry, and then we apply it towards what Zebra's doing and how it meshes with our priorities. And what I'm sharing on this slide is kind of Zebra's priorities in retail. So at a high level, it would be optimizing inventory, building a smarter operation, and elevating the customer experience. In particular, we've been spending a lot of time on inventory management and order fulfillment. And what you could see there on the left is we acquired Profitect, and now that's Zebra Prescriptive Analytics. We acquired Cortexica, that were experts in AI computer vision and image recognition. We invested in a company named Focal Systems that I'll talk about a little bit later, but they do shelf edge cameras to help with inventory visibility. We invested in 3 robotics companies to help with fulfillment, and 2 of them I'll bring up a little later, but one is Fetch Robotics and the other is Locus Robotics. And then you can see there, related to asset protection, Profitect fits into that segment too. We've been spending time looking at solutions to help improve associate enablement and training. And one of the acquisitions we made last year, and it was a significant acquisition for us, was Reflexis. And we believe that gives us greater capability in software and actually makes our devices that much more useful. And last but not least, we've been looking at elevating the customer experience. And one way to do that, and how we spent some time and money, is to improve the checkout experience, and Focal Systems is relevant there too. So as of January 2021, this is what our portfolio looks like, and this is how we look at it. So we look at it across all our verticals that we serve. And then at the bottom, you can see we're looking for stuff that's related to the core or adjacent to the core or transformational. And you can see there the 3 A's at the bottom right-hand side. And that's where we've been putting more of our emphasis, is finding companies in those 3 spaces that we feel are transformational to Zebra and would have a large impact on our customer base. So message number 2, retailers are adopting automation, AI, and analytics to bring them into the omni-channel e-commerce world. They're looking at e-commerce enablement, greater personalization, digitization and automation of the entire supply chain, and greater in-store automation. And Zebra is proactively investing in these areas. So now I'm going to talk a little bit about some of those solutions in those segments. So I think about the evolution of retail inventory management. And in the past, it could have been done manually, and you could get inventory done. It could be once a day, but typically once a week or once a month. You move that to the present, where there's a lot of automation involved, and we've seen, and many of you have seen, Zebra has the Smart Site solution. but there's also several other players in the space, like there was Bossa Nova, Simbi, Fellow Robotics, and a few others. What we are envisioning potentially in the future for certain use cases or certain parts of stores is when a customer or when the retailer wants to take inventory on a more regular basis and maybe multiple times a day. And so we've looked at several different companies that provide shelf edge cameras. So you could take that image of across the aisle once an hour or however often you want to do it, and make sure you know if you have stockouts or what's in inventory by taking that image and processing that image. So we've been watching this space for a while, but what's happened over the last couple of years is we've seen more rollouts. So in the States, a retailer named Woodman's rolled out Badger grocery robots. There's a company named Simbi, and they rolled out at Schnucks. Walmart, interestingly enough, ended their contract with Bossa Nova Robotics, who at the time was the leader in that segment. And what Zebra did is we placed a bet, or made an investment, I should say, on a company named Focal Systems, who in 2019 won a rollout with a retailer in the US called Wakefern. And just recently, at the end of 2020, announced a deal with Walmart Canada. So we look to invest in companies that are winning and that have a major impact on our competitors. And we believe that Focal Systems is one of those companies. When we look at the space, just to give you a sense of some of the tools we use, there's kind of this ecosystem or landscape chart that is produced by CB Insights. And to give you a sense, we look at dozens of companies, and actually hundreds of companies on an annual basis, but dozens of companies in a particular segment. And this is the segment that they called inventory monitoring. And you can see a bunch of the startup names in here. Probably some of them are familiar to you. I would welcome the opportunity to discuss some of these companies with you, or you can contact your Zebra account manager and have that conversation. But we've been spending a lot of time looking at different technology solutions in this space and enhancing our value to you. This is a bit repetitive, but how do you take inventory? You could do it with smartphones. You could do it with robots or drones. There's actually a drone company that flies around a store and takes inventory, leveraging computer vision cameras. There's shelf edge cameras. And some retailers are attempting to do this with ceiling cameras and maybe even reusing some of their security cameras for this purpose. And once again, we invested in Focal Systems, and you see kind of a picture of their camera on the left there, taking an image. This is what the camera sees, identifies stockouts or low stock areas, and then communicates that, leverages analytics, and can deliver a task to a Zebra device, to an associate using a Zebra device. So that's inventory monitoring. In terms of checkout, there's a lot of different definitions of frictionless checkout or automated checkout or cashierless checkout. I mean, the simplest one is probably just ordering something on your phone from home and having it delivered. But as you see here, there's self-checkout, click and collect, scan as you go. On the bottom half of this, it's checkout solutions that are enabled by computer vision or object recognition, which is a subset of artificial intelligence. And those solutions are smart carts, automated checkout lanes, and frictionless grab and go. So I look at that space and I've watched it evolve. So I watched what Amazon has done. There's a bunch of other companies that have entered this market. Trigo's one. There's a company called Grab and Go. Standard Cognition was one of the big ones that took in a lot of money and has a high valuation. There's another one called Zipin. Recently, Hudson announced that they were going to leverage Amazon's Just Walk Out technology in airport stores. And not too long ago, it was when Tesco invested in one of these companies named Trigo. So we're watching this market grow. It's still in its infancy, I would say, but we want to plant some seeds here and make sure that we're a part of the growth of this space. Once again, I look at an ecosystem chart and see all the different players involved in this. And this doesn't capture all of them, but it gives you a sense for many of the players. And I would assure you that Zebra has talked to many of these players as we consider what would be relevant to, once again, serving our customers going forward. Last but not least, I want to talk about fulfillment and micro-fulfillment and local delivery. The shift to online shopping, of course, has driven a huge increase in local delivery. There's multiple issues that this creates. You got to know your inventory. There's increases in picking costs, picking labor costs. There's increases in delivery costs. And there's different solutions that we've been evaluating to help solve those problems. What we understand from some research is that in most of these cases, as you'll see from this chart, retailers are losing money on the buy online, pick up in store deployments or applications. And so we're trying to figure out how we help improve that efficiency. And part of that is through automation. This chart shows all the basic trends that we look at. So the e-commerce boom, driving a transition to omni-channel. There's an increase in urbanization, and there's an increase in automation and the quality of robotics driven by better sensors, better computing power, lower cost devices. What you see to the right here, and this is how investors look at trends, the average on the right here, the average growth in the space, whether it's systems, services, or software, is around 10 or 11%. We want to invest in things that are growing at that kind of rate. So we look for these trends. And because of those trends, we've made some investments in automation companies. So Locus, Fetch, and Plus One Robotics. So Locus really is a simple bot, and it's used in each picking or individual item picking warehouses. And they've actually been trialing with some retailers now. And it's how do I improve the speed and efficiency of my picking? And what the robot really does is it reduces the walk time. So in general, what you have is a person that stands in an aisle and the robot comes to them. On that little, basically, tablet up there, you'll see that it has a picture of the item to be picked, the serial number, you pick the item, you scan it, you put it in a bin, hit the button, and the robot does the walking, and you go look for the next robot to do the picking. What they found, and one of their largest customers is Boots Walgreens in the UK. What they found is they basically double the productivity of the worker. Okay, and it's a robot. They sell them on a rental basis. Basically, you rent robots on a monthly basis, so it's not a purchase of a robot. And that's one of our fastest growing portfolio companies. And they've just grown a ton, and they're serving a lot of our retail and our logistics customers. The second company that I wanted to mention to make you aware of is Fetch Robotics. So Fetch, unlike Locus, who has basically a focus on each picking, Fetch has a variety, a suite of robots, and I would call it a virtual conveyor line of autonomous robots. So taking heavier stuff, cases and pallets, and moving them from point A to point B. So we invested in both companies. We are working closely with those companies. In some cases, they buy some of our stuff. We're looking at potentially some other deeper relationships with both of those robotics companies. So I look at the other piece of this that I mentioned was fulfillment centers. And what you see here is I see this becoming a much bigger thing as companies are trying to serve their customers faster, better, and cheaper, and meet those SLAs for 1 hour delivery time or 4 hour delivery time, or perhaps it's 1 day or 2 days. But they have to look at that, and the way they improve their ability to do that is through automation. And the companies I mentioned can help do that. We're also looking at some companies that we haven't invested in yet, but we're exploring. So I show this ecosystem chart. It talks about tackling the last mile. And one way to do that is with micro-fulfillment. And you can see the names of some of the companies here, some of the startups here that are looking at helping retailers solve their last mile problems. I didn't highlight that there's drone delivery and autonomous ground delivery and a whole variety of on-demand delivery companies. And I'm sure you're familiar with many of the names in there, and their valuations are astronomical right now. But once again, we follow the money. We want to understand the ecosystem. We want to pick some people that we can engage with and partner with to help serve our customers better. So to give you a sense, micro-fulfillment is a big thing now. It was in its infancy a few years ago, but this gives you a sense as to all the different companies that are players in this space. And I would emphasize again that Zebra is talking to many of them. And to give you a sense, I like to think of it in real simple terms. MFCs are like a giant vending machine. They do storage, they do picking, they do retrieval. And I would argue that it's less about the automation technology, although that's critical. It's more about the supply chain reinvention. So what micro-fulfillment's trying to do is, how do I get the goods closer to the end user? So I want to shorten that last mile of delivery and simplify it. I want to maximize picking efficiency, and that's some of the automation. The other piece of the story is they're trying to optimize square footage. So how can I use less real estate especially if I'm in an urban area, so I can lower my cost of space. So message number 3, there's various ways to improve inventory visibility and the checkout experience and order fulfillment. Zebra's in developing internal solutions and evaluating startups that help solve those problems. We invested in one in Focal Systems, we acquired another in Cortexica, and we invested in several robotics companies, once again, to help our customers, to help you fulfill orders more cost effectively. And so last but not least, I think what is the next 4 years going to bring? And I don't know. I don't think it'll look like this, but I can only hope for greater unity in the United States politics. But what will they bring? They're going to bring autonomous delivery. They're going to bring smart pickup lockers. Frictionless is going to expand. I expect that AR and digital engagement is going to grow. And I expect we'll see more along the lines of contactless payments if I just follow the trends. And so it looks, this is another CB Insights chart, but it looks something like this. You can get a sense as to all the different things that Zebra's looking at, because they can leverage our technology and we can leverage their technology. But in-store fulfillment, virtual aisles, localized inventory, greater experiences, in-store cameras, and in-store cameras being used for multiple reasons. So this gives you a sense as to some of the things that we're looking at, and we'd like to continue the discussion. Whoops. And so in conclusion, thanks for your business. Trust me, Zebra's trying to earn it every day. We're looking inside the company for solutions, but we're also looking for the right people to partner with to help you succeed. And our success is tied to your success. And to achieve that, we both need to innovate. So if you want to know more, there's my email address, but certainly I would suggest you contact Mark or your local account manager, and we'll be glad to have that discussion and go through some of these things if you're interested. So thank you very much for your business. Hope you have a great day.